Hello everyone, and welcome to this educational presentation of 2 simple steps to help maximize your trading. Now, if you think of it, we have just about 1 month left in the year, in the trading year. And in today's presentation, I'm going to show you how just by applying these 2 simple steps, you can potentially close out this year with a real strong advancement in your trading. For example, what I'm going to be sharing with you today can be found in this chart here. If we look at this chart in Yelp, I'm going to show you with these 2 simple techniques, you would have been able to identify a buy setup right here and potentially been able to capture roughly 12 points in 1 month. Remember, we only have 1 month left in the year, so hopefully we can finish it out strong. Welcome. Thanks for taking time out of your Wednesday morning to come join me today. My name is Steven Primo. If you're new to my presentations, I'm the president and founder of Specialist Trading, and we are first and foremost an educational company. We're a little bit different from the other webinars you may be attending in the fact that all we want to do is educate you so that you can be in charge of your own trading. You see, it's our belief that the reason why most traders fail or never really get going with their trading is because they're taking their cues or their trading answers from someone or something else. In other words, they're relying on something to tell them what to buy, what to sell. This can either be a nightly signal service that you pay for, it can be a chat room that you subscribe to, or watching TV and waiting for someone to tell you what to buy or sell. We feel that's a recipe for disaster. The reason is because if that works so well, then why is it estimated that upwards of 80, even 85% of all traders fail? I'm speaking about this from firsthand experience because when I first started trading some 4 decades ago, that's the way I used to trade. And if it didn't work for me then, I'm sure it's not going to work for you now. So I started my career 40 years ago on the floor of the Pacific Stock Exchange. I was on the floor for 16 years, and 9 of those years I was a specialist. That's where we get the name specialist trading. A specialist doesn't mean you're any more special than anyone else. It just means that if you wanted to buy or sell a particular stock, let's say you wanted to buy IBM, well, you'd call up your broker, the broker would call the floor trader, and then the floor trader would go to the trader who specialized in that stock. In other words, he made a market for you to buy or sell. So I did that for roughly 9 years. I traded through the crash of 1987 and the bull market that followed. I've been in just about every market scenario environment you can think of, and I've traded just about every method or system or strategy you can think of. So in 4 decades, I know what works in terms of consistency, and I know what doesn't work. So that's what we do with specialist trading. We just teach our students around the world in over 110 countries and in every state in the United States, virtually all the things that I've accumulated in my 4 decades that have shown signs of consistency. Now today I'm going to share with you 2 simple techniques that show extremely powerful ways to increase your odds for consistency. In fact, we use them in a number of our methods here at Specialist Trading. So this promises to be a good presentation, a lot of information, but before we do, we're required by law to go into the presentation, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results today using these 2 simple techniques, but please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated. So once again, we're required by law to show you this. As you're taking a moment to view our disclaimer, I would also like to take this time to invite each and every one of you to follow us on Twitter. There's our handle right there, abbreviation for Specialist Trading. You may want to copy that down. Every day I post different information, anywhere from signals that our strategies have generated to actual bits of wisdom I've accumulated along the way. So lots of great free information to follow us on Twitter. Okay. Now remember, we are first and foremost an educational company. As you'll see today, we devote a lot of time, especially in my free presentations that I give every week, to teaching you. So even if you don't decide to become a member or a student of mine, we like to leave you each week with something that you can use on your own, that you can use to elevate your own trading. As you can see here, my goal is not to force feed you signals. My goal is not to sell you some $20,000 system and say good luck and hope that it works in the future. My goal is to teach you the things that have stood the test of time, the same things that turned my trading around when I was struggling 40 years ago, and hopefully we'll be able to turn your trading around as well. Okay? So this promises to be a great presentation, a lot of educational information. We're going to conduct it like a class, so therefore I do want to take each and every one of your questions, but unlike other webinars, if we stop for every slide to ask a question, we'll be here for a number of hours. I don't want to take time out of your day for that. So if you have a question, kindly wait till the very end to ask. Okay, I promise I'll get to each and every one of your questions. The only one I will answer is the most popular one, and that is, do you record your presentations. Yes, we do. So if you have to leave early, or if you're having technical difficulties, oftentimes if you just log off and then log back on again, the difficulties will be resolved. But if you're still having technical difficulties, we will supply you with a link to this recording. But if you happen to join us late, we have a fairly good-sized crowd here. Remember, please wait till the end of the presentation to ask any questions, okay? There's a little box here I have to open up in order to see your questions, and I'm not even going to open that up until we get to about 30 or 40 minutes from now, all right? So kindly wait till the very end. So let's begin. All right, step number one, we're going to jump right into it, all right? Step number one, buy signals can only be entered above the 50-period moving average. And conversely, sell signals can only be entered below the 50-period moving average. Sounds too simple, right? But trust me, this is one of the most powerful tools and rules we have here at Specialist Trading. I know it just sounds too easy. It's like, well, boy, this is the big step that's supposed to help me. But trust me, this is extremely, extremely powerful. Look at this chart here. There's a weekly chart of the spiders. That's the ETF that represents the S&P 500 index. Now, someone looking at this would say, well, yeah, Steve, it's easy to see in hindsight that this has been going up, but how could I have known well in advance, going back to the beginning of the year, let's say, if this were going higher? Well, you had the 50-period moving average. And we knew well in advance right here that we were going higher. Why? Because price was above the 50-period. So even though you had sell-offs here and then another sell-off here, those are actually buying opportunities. That's not when you should be calling the top of a market. That's when you should be looking to buy. Why? Because price is above the 50-period moving average. Now, conversely, we look at this chart in Dick's Sporting Goods, and someone looking at this would say, gosh, Steve, I go to this chat room, and when we gapped down here, and then we kind of made this double, triple bottom, this was major, major support. All the institutions were buying, and the volume picked up to the buy side, and I don't understand why it went lower. Remember, those are the same things I was taught 40 years ago, and they didn't work then, so trust me, they don't work now. The only thing that works is to listen to the market. And what was the market telling us? Well, if you applied the 50-period moving average, the market was telling us well in advance, way back here, that it wanted to go lower. So there's no reason in the world that you should have bought this stock. I don't care how oversold it was. I don't care what chat room told you to buy this or what the earnings were going to be fantastic. It doesn't matter. Until we have 2 to 5 closes above the 50-period moving average, you should never be buying anything. Now, if you don't believe this, if it seems too simple, go back and research your last 10 to 20 trades. I can almost guarantee you that the reason you had losses were because you were out of sync with this simple rule. Only buy if your price is above the 50-period moving average, and only sell if price is below. Most people do the opposite. We're always taught to try and buy low and sell high. And trust me, it doesn't work. It'll work every once in a while, like the slot machines in Las Vegas. You'll buy at the bottom and it'll be a perfect buy, or you'll sell at the very top. But that's, those are very rare instances when that happens. Most of the time, just like the slot machines, you'll get a little jackpot that'll give you this false sense of security. But over time, if you do that long enough, you'll see that you really haven't made any money. So it really is a gambler's mentality to try and pick tops and bottoms. You'll do a lot better. You'll be trading 10, 20, 30, 40 years down the road if you are in sync with the overall trend. All right, so that's step number one. Now that we know what side of the market to be on, we have to refine it a little bit and look for a little structure. How do we do that? Well, it's just as simple. A buy signal must close in the top 25% of its range. All right, so what does that mean? Well, we look at the bar, and it doesn't matter what time frame this is. It matters not at all what the market is. It could be currency pairs, it could be the Bitcoin, it could be stocks. It makes no difference. But once you get a bar that closes in the top, that's a buy setup. But most students say, well, what do you mean by the top 25%? Well, you just want to simply divide this by 4 separate equal parts. And if you close in that top 25%, that should be your buy signal bar. In other words, that's the bar. If you were thinking of going long and if you were above the 50 and all your rules came into play, that's the bar that you get in on. Because that's the market telling you it wants to go higher. Now, conversely, a sell signal must close in the bottom 25% of its range. So once again, it doesn't matter if this is a 1-minute chart or a monthly chart. If your strategy, whatever it's based off of, says you should sell this, it's a short, buy the puts, whatever you want to do, wait for a bar that closes in the bottom quarter. So you simply divide it by 4 separate equal parts. And if you close in that bottom 25%, that's your signal bar. That's the bar telling you it wants to go lower. All right. How many times have you sold something or bought something and it doesn't go in your desired direction? You're kind of sitting there just waiting, and oftentimes you'll get stopped out. Well, this will increase your odds for consistency if you wait for this bar. So let me show you examples here. Let's look back at that old chart and the spiders, the weekly chart. Each and every one of these setups was above the 50 period, and the bar closed in the top 25%. Now, if we look at Dick's Sporting Goods, we are below the 50, and each and every one of these sell setups closed in the bottom 25% of its range. Now you say, is it just that simple? Because there's a lot of other bars that close in the top 25 and a lot of bars that close in the bottom 25%. Well, no, what we're showing you right now is probably one of our most consistent strategies that we have at Specialist Trading, and that's strategy number 4. This was something that was introduced to me some 40 years ago on the floor. In fact, when I was struggling, this was the first method that my mentors taught me. Let me share with you some of the highlights of this strategy. It's for virtually all traders, beginners to advanced. So it makes no difference if you're trading for 2 weeks or if you've been trading for 20 years. Everyone in our courses get the same basic format. It was originally designed for traders looking to catch quick momentum moves. In other words, when I first started trading it some 40 years ago, I would get in and out of a trade in 5 minutes because we're day trading on the floor. But we've devised ways to stay in it days, weeks, even months if you'd like. Now, its intensity level, if 1 was the most intense of all strategies that you've ever traded, you couldn't even leave your computer to go to the restroom, and 3 was the most relaxed, where you could enter orders and walk away for the day, it's right in the middle. It's a very moderate number 2. It only uses 1 indicator because it's based on a pattern. We're looking for a specific pattern. And guess what? You've already got 2 of the rules to this particular strategy, what I just shared with you. This can be applied to any time frame, any direction, and any market. This is why most students love this strategy, and why most students, when they become members, start out with strategy number 4, because it's simple to apply. You don't need a lot of convoluted logic and indicators. It's just based off a pattern that we teach you what to look for and high probability generated signals. Now, members will automatically receive buy and sell indications. In other words, you'll see those up and down arrows telling you where to buy and sell, but those are only for educational purposes only. In other words, we want to teach you, as I said, we are first and foremost an educational company. We want to teach you how to spot these setups just by looking at the chart. And after a little bit of practice and research and studying, you'll be able to do that. I never use the up and down arrows because I know when a signal has been generated. But for educational purposes, we provide them there for our beginning students so that they have a means of checking their work. Now, our edge here is consistency. Not every trade is a winner. And don't ever let anyone tell you that, because if you go to a webinar and someone tells you that this strategy or this system generates thousands of % a year, I mean, that's silly. I've been trading long enough to know that there's nothing wrong with having small losses from time to time. There's nothing wrong with a basketball player, a professional basketball player, not making every basket. There's nothing wrong with every entertainer or every actor not having a hit movie. What you're looking for is, in any profession, especially in trading, is a method or a technique to make back those small losses. This is what consistency is. And I'm happy to say that all of our methods have shown to have high levels of consistency. Now, let me share with you exactly what we're talking about. We talked about that opening chart that we shared with you in Yelp. Well, the first thing we want to do is see that this is where the buy signal was generated. Now, how did we come up with that? Well, we're above the 50-period moving average. Okay, so that's rule number 1. And that's, by the way, is the only indicator you're using in this strategy. That's how simple it is. The indicator is what I'm sharing with you today. So rule number 1 is we're above the 50, so are we going to be selling this at all? Absolutely not. We're only going to be looking for buy setups. So automatically you know that you won't even care if you see on TV that someone says to sell Yelp, or if that the earnings are going to be terrible, or if there's terrible news and economic conditions. You don't care about that. We're only looking at the stock in front of us. So now this bar closes in the top 25% of its range. That's the second rule, and we're above the 50. Now, I can't give you the rest of the rules. There are 3 more rules, but that wouldn't be fair to the people that are members of our classroom if I gave away everything for free. But I've already shared with you nearly half of the rules, and that generated a valid buy signal. And so about a week or 2 later, the stock jumped 12 points for the next month. Okay. Now, did we have any idea that this stock was going to gap up that way? Absolutely not. But the market was telling us in this simple and specific pattern that we teach you. Remember, I've been using this for 40 years, so it has high levels of consistency. If it stopped working, I wouldn't be using it that long. So let's look at some more strategy 4 examples just to show you how consistent this method is. And remember, we're not saying how profitable this method is because everyone trades it differently. Consistency is 2 steps forward, 1 step back. So there will be small losses from time to time. Okay, we're looking at CCI. Now, someone looking at this would say, well, Steve, you know, it's not very easy to see what's going on here. We're kind of basically going sideways. It looks like we're rolling over. Well, I'm going to show you how simple it is to find this, especially when applying this to our new platform. As you can see here at the very top, this is our new PTS Primo charting platform where it does everything for you automatically. In fact, let me show you how simple it is. You don't even have to plot the 50-period moving average or look for the setups in order to get these educational signals. With this, all you would do is click on the Strategy 4 tab in the upper green Strategy tab here. Okay, so since we're talking about Strategy 4, you'd click that on. A drop-down menu appears, and all you want to click on are the signal arrows just to check your work, and there would have been a valid buy setup right there. So that tells you, once you've learned how to spot this, if you're in sync with your education. And right here you would have been, and the stock gained 9 points in 3 weeks. So you had 9 points to potentially work with. And once again, I can't tell you where the exact entries, where the stop placements are, where the exits are, because it wouldn't be fair, but those are part of the rules. All right, let's look at CMG. Someone say, well, Steve, this is a buy here. Boy, the guy I watch on TV says this is major support. Major Fibonacci support level. This is where all the institutions are buying. You got to buy this here. Okay, it's tremendously oversold, and all the indicators are not confirming this. This is the way most people make their trading decisions. You see how everything I had was justified based off of what somebody or something else said. It wasn't in any way justified what the chart was telling me. So the chart was telling us that it's, well, we click on Strategy 4 and click on signal arrows, that it's a valid sell signal. This means it's below the 50-period moving average, which we don't have plotted, and it meets all the rules. So where everyone else was saying, well, you know, the earnings are going to be great, you have to buy here, we were saying this is a valid sell, and the stock dropped 110 points in just the next 2 months. Now, the beauty of this strategy is if it's strong enough trend, you will see more and more signals generated all along the way down. All right, let's look at LMT. Once again, it looks like major resistance right here. A lot of people say, I'm not going to trade this because we're just kind of going sideways and we're having trouble getting through here. But if you clicked on the Strategy 4 tab, you would have seen that a buy signal was generated. You see here we're above the 50 as generated by the up green arrow, and we're closing in the top 25%. The rest of the rules have been met, and the stock gained 17 points in 2 weeks. So you had potentially 17 points to work with in the next 2 weeks. Remember, we're an educational company, so we're not telling you how or when or why you should trade. So in other words, we're just furnishing you with these setup points that have shown to be highly consistent. Now, if you wanted to apply them to options, by all means, go ahead. In fact, I would say that over half of our students apply these signals to options, either just buying long calls or long puts or some type of spread strategy for that direction. Other people will buy the stocks, actually. Now, here's an example of sometimes it doesn't work really quickly and you either have to hold on for a while or just wait. We had 3 valid sell signals generated, but nothing much has really happened. But ultimately, things will kick in, okay? Now, here's a signal here in GWW, okay? It was generated clicking on the Strategy 4 tab, so it's a valid sell signal, and the stock dropped 13 points in the next 3 weeks. Now, let me show you something here. This is where a lot of people have trouble because they say, well, Steve, how can I take advantage of this? Here's an older example in Apple. As you can see here, the stock is really in a rangy mode. It's kind of whipsaw, goes straight up, straight down, straight up, straight down. Someone looking at this would say, there's no way you can trade this. The market's really not telling me anything. Remember, the market doesn't tell you everything if you look at it using the old traditional ways of how you're supposed to trade, if you're looking at support and resistance or things that are too subjective, sure, it's not going to tell you anything. But if you learn how to listen to the market by simple patterns or simple tools, you'll see that an actual signal was generated once you clicked on strategy 4, click on the signal arrows, and there was a buy signal generated right here. So the market was actually telling you it wants to go higher. And as you can see, the stock gained 7 points in the next 2 weeks. Now, this will happen from time to time. As we said, it's all about consistency. A valid sell signal was generated here. Let's say you would have gotten short on the close and nothing much happened. In fact, it went sideways to higher. And then look what happens next. A valid buy signal is generated. So a lot of our students are willing to stop and reverse. A lot of our students will just take the loss. But many times, if you stop and reverse and go with it, you'll recoup that original loss. And as well, this is the QQQs, that's the ETF for the NASDAQ 100 index. Many times, rather than actually trading this, you can use this as a market directional tool. So in other words, right here, the sell signal was telling us that the market was rather negative and most likely was going lower. So you could have used this to maybe sell stocks that are in the index or maybe a short you had. But if you were waiting for a buy setup, you would have waited for this one, and this was telling you that the market's going higher, and it went up hundreds of points in the NASDAQ. Now let me show you what we mean by consistency, because I promised you that not every trade works out well. Here we have a series of buy signals all the way down, and not one of them is working. Each one would have been a loss, okay? Now you're met with another sell signal on this time though, and so you think, okay, well, these buy signals haven't worked. I've lost 3 in a row. I'm going to take this sell signal. And look what happens. It goes down for one day and then goes straight back up. And on top of that, you're met with a buy signal. At this point, you probably say, this stuff doesn't work. I don't know why I purchased this strategy. This is ridiculous. And so you don't take that last trade. And look what happens. You could have recouped all of your losses and then some. Or this, you get, well, the market's been going up, and then you get a valid sell signal. So you think, well, that's pretty good. We're selling at the very high, so I think I'm going to do very well. So let's say you buy the puts to this particular stock, and look what happens. It's making higher highs in the next week. So we have to ask ourselves, how can we increase our odds for success? Because even though strategy number 4 just by itself holds high levels of consistency, it still will run into these pitfalls every once in a while. You still will have these rangy markets where you'll get whipsawed or it just won't work and you'll take these minor losses. So can we increase our odds even more? Is there a filter we can add? Well, yes, there is. Probably one of the best filters I've ever known and something I trade on a daily basis. It's by simply adding the ATTENDEE. You've heard me talk about this before. I use this every day in my own personal trading. I have for the last 40 years. It's something that was taught to me on the floor. So if you're wondering what it is, it's a proprietary algorithm. We're keeping the rules in-house. Now, when I first learned this on the floor of the exchange some 4 decades ago, we called it the formula because it was a simple formula that you had to calculate. It wasn't complicated, but it was very cumbersome, almost to the fact that you couldn't watch the market. You were simply calculating these numbers all the time. So what we did was we made it a proprietary algorithm, and then we turned it into a color bar tool. So there's absolutely no work on your part. There's nothing that you have to do because the bars are automatically colored, either green or red. And so we use it now as a short-term trend identifier because this is the beauty of this. It's not a system. It's not a strategy. It's the best tool I know of for defining the short-term trend. Now remember, the 50-period moving average defined the overall trend, the overall side of the market you should be on. But we all know that there are trends within trends. And so these are the short-term trends. They're very similar to if you look at the ocean, the longer overall trend is similar to the big waves out you see on the horizon. The short-term trend are the small waves hitting the shore, hitting the sand. So that's what the ATTENDEE is. It's a short-term trend identifier. When you see a series of green bars, it's telling you the short-term trend is up. When you see a series of red bars, the short-term trend is down. Now, let me show you how powerful this is because it really identifies the trend, the short-term trend, better than anything I've ever used in my 4 decades. For example, looking at this example in Aetna, we see here that we have a nice uptrend in play. And usually people are convinced by using some lagging tool or some lagging indicator that we're in an uptrend, so they decide to buy somewhere up here. And things are going okay for a couple of days, and then the bottom falls out and then the trend changes. So is there a way that we could have known in advance not to find the bottom or the top, but just prior to any other tool when the trend was going to change? Yes, there is. It's the PET-D. All you have to do is apply the PET-D in our upper green strategy tab here, and it automatically colors the bars. So we would have known well back in advance, 2 to 5 bars, that we were in an uptrend, and well in advance that we were going lower once the bars turned red. So this is a great way to increase our odds for consistency. But how will it help in other markets? Well, here's a weekly chart of the IWM. That's the Russell 2000 ETF. As you can see here, we have a straight down market followed by a straight up market. We applied the PET-D, and we knew well in advance that we were going lower, and we knew well in advance that we were going higher. Here's a 10-minute chart of the E-mini futures. As you can see here, the entire day, well in advance of this nice rise we had in the market, the bars were green. So we knew in the very 10 to 20 minutes of the opening that we were going higher. And this is when the trend was changing, telling us either to get out or we could look to go short now. We can use this on currency pairs. Here's the monthly chart of the British pound. The British pound was straight up going back for about 4 years. And then roughly about 3 years ago, we went straight down, well before the Brexit news came out and the British pound fell out of bed. So those are the great advantages of using the PET-D, but what we found is the best way, the best advantage to use the PET-D is by applying it as a signal confirmation tool. All right. When we do this, we combine strategy 4 with the PET-D. Well, we get one of our best packages, one of our best programs to date. We call this the dynamic duo because we create the synergy for consistency. We've already got the high level of consistency in strategy 4, but when it's confirmed, when the signal is confirmed by the PET-D, we've increased our odds for consistency even more. So we've added this tremendous synergy. That's why we call it the dynamic duo. So here's the way it works. If strategy 4 generates a buy signal, the PET-D must color it green. In other words, that bar that closes in the top 25% and that's above the 50-period moving average must be colored green. That way we know that it's confirmed by the PET-D. Conversely, if strategy number 4 generates a sell signal, in other words, if we're below the 50-period moving average and we close in the bottom 25%, the PET-D must color that bar red. So we will not take the signals unless the PET-D is confirming it. So let's look at those examples where we lost money, because small losses may appear from time to time, as we see here. Here was a sell signal, but what happens when we apply the PET-D? Because this didn't work out at all. Well, we would simply go in our PTS Primo charts, click on the PET-D strategy tab at the top. The colors will automatically change. And as we can see here, sell signals need to be colored red. So what color was this? Well, this was green. The down bar was colored green. So therefore, you would not have taken this and you would not have lost any money. Sometimes the best trades are the ones you never take. How about this one? We looked at Netflix where we were buying all the way down. We had one sell signal, didn't work out. Then we had a buy signal that we said, I'm not going to take this and have 5 losses in a row. And then that one worked out. Well, once again, you click on PET-D. It automatically changes the color. Now look at all these buy signals here. What is the outline of the bar? Remember, it's up day because we need to close in the top 25%. So the bar is hollow, has a white back. But look at the border. It's red. Each one of these had a red border. So remember, in order to take a valid buy signal, what color does the PET-D need to color that? It needs to color it green. So we would not have taken these first 3 setups. Now, we have a sell signal. It's colored red. So we would have taken that trade. And ultimately, we had a small loss. But we would have stopped in reverse because there was a buy signal right here. Outline is green, closed in the top 25%. And we would have made back that small loss and more. So this is how we add to our consistency, by applying the dynamic duo. The PET-D is such a fine-tuned trend directional tool that we know in advance if we should be buying or selling simply by using it to confirm, as we did right here. At the very low, we got a green bar telling us that this is a valid buy signal. All right, so let's look at some more dynamic duo examples just to show you how high and how more you can increase your odds for consistency by applying this simple duo here. All right, let's look at CCI. Remember, we looked at that earlier. We had a buy signal. We click on the ATTENDEE tool in the upper green strategy tab, and we see here that it's colored green. Now, the bar before it is red, and the bars prior to it are green. It makes no difference what those bars' colors are. It absolutely makes no difference. This is where a lot of students have trouble. They say, well, Steve, all the bars before are red, so why would I take this one? All we're concerned is if the setup bar, where the green arrow is colored green. And yes, it was. So that gave you the confidence to take this trade. And it's the same with sells. We have no interest in caring what the prior colors were. All we're concerned about is that this bar here is colored red. So when we click on the ATTENDEE tab, we want to make sure that that's red, and automatically we see, well, we've been red for a long time. So we don't have to worry about this being in a short-term downtrend. And as you can see, even these two signals were colored red. So now we have this added level of confidence because the short term and the overall trend are in place here. They're in sync. All right, once again, someone looking at this would say, well, Steve, there's no trend at all. How can you get a trend out of this? Remember, all we're concerned about is the color of the setup bar. And there's the setup bar. We click on the ATTENDEE tab, and we automatically change the colors. And even though it looked like we were going sideways, look how the ATTENDEE was already coloring this green. So the majority of bars are green, and our setup bar was green. It generated 17 points. You had 17 points to potentially capture in the next 2 weeks. Okay, so a buy setup was generated here. That worked pretty well. And here's another one. Well, let's say we took this one, but we've always been taught, I've always been taught, Steve, you want to buy low, sell high. This was a lower level here, but now I'm buying at the top. I'm not sure I can do this, even though it's an hourly chart. I'm not confident. Well, what will give you the confidence is the ATTENDEE. And this buy signal was generated green, and this buy signal was generated green. So look at the nice run-up you had in the E-mini on a 1-hour chart. Makes no difference what market you trade. It makes no difference which direction. Here's the Canadian dollar, okay? The dollar, Canadian dollar currency pair. Now we have a buy setup that obviously didn't work out. And then we have 3 sell setups. How could we have known which ones to take? Well, we had the ATTENDEE, and look at this buy setup. In order to go long using the dynamic duo, that buy bar needs to be colored green. Is it colored green? No, it's outlined red. So we're not going to take that trade. And ultimately, we didn't lose any money. Next, we have 3 sell signals that were all colored red. The first one worked out okay, but we're not sure about the second 2. But the ATTENDEE is telling us we're in sync with the short-term trend, so you stay short and another 1,300 pips to the downside in the next 3 months. Now, you had some more sell signals generated here. Here was a sell signal, but it was colored green. So you wouldn't have taken it. But 2 or 3 days later, you could have gotten in on this signal, or if you missed that one, on this one. Okay, so let's recap before we go to questions and answers. Remember, we talked about strategy 4. It's something I was taught some 4 decades ago on the floor. This was the first strategy that my mentors taught me when I was struggling. Trust me, I was doing everything you've probably been taught. I was looking at all the news. I was waiting with bated breath for every news announcement to come out, from earnings to economic indicators to jobless claims. I was looking at all that. I was also looking at every indicator you could think of, every technical indicator from support and resistance to overbought, oversold. And trust me, nothing was working in terms of consistency. It wasn't until I learned the simple pattern recognition strategy, strategy 4, that my trading started to get on track. Once I learned how to apply the formula, which we retitled the ATTENDEE, I developed this with Pro Trader Strategies, this color bar algorithm, then our odds for consistency generated even more. And we created what we call our dynamic duo. This is our most successful package to date in terms of consistency and in terms of popularity. We have more students involved in the dynamic duo package than any other package we have at Specialist Trading. So ask yourself, as we come to the end of the year, anything I just taught and shared with you today, do you think these edges could have helped your trading at all? We have already 11 months in 2017. Are you anywhere near where you thought you'd be at the beginning of 2017? What have you known about that simple tool, a 50-period moving average, in January 2017? Do you think it could have helped your trading? Or what if you had known about only to buy if the bar closes in the top 25% and only to sell if the bottom closes in the bottom 25%? and also in line with the 50-period moving average. I think those things could have helped you tremendously this year to increase your odds for consistency. Well, what if I could give you so much more information that could help you close out the year strong and start 2018 in the right direction? Well, here's our attendee discount we have for you today. This is a great offer. We're throwing in a lot for you because we know that many of you are probably struggling with your trading, and we want to get you on track. We're going to throw in our dynamic duo. That's strategy number 4, along with the ATTENDEE tool. Okay, instant course access, detailed instruction, some 20 videos. You're going to learn all of the complete rules, the entries, all of the complete exits, all of the stops. We're going to also tell you how to trade it aggressively, conservatively. We're going to throw in the ATTENDEE as well. That comes with 4 trading techniques that are on top of strategy number 4. And here's the one thing that's extremely important. We realize that a lot of you have different types of platforms. Many of you have MT4, TradeStation, Metastock, FCXM, Thinkorswim, NinjaTrader. Guess what? We have add-ons for every one of those platforms that you can use that will automatically generate the up and down arrows and that will automatically generate the green and red bars. So regardless of the platform you have, I would say we cover about 90% of all the major platforms by supplying you with the proper educational tools so that you can spot these up signals, these down signals, as well as change the bars to meet your needs. Now, this also includes mentoring correspondence. So I'll be there with you every step of the way. We're not going to just simply say, here's the dynamic duo, good luck, just follow the rules and you should be okay. No, you're my student. You're going to be my student for life. As long as I'm trading, you can email me through email correspondence. So any questions you have, I'm there with you every step of the way. Now, once again, any platform that you have, our add-ons will mostly fit most of the major platforms, okay? But we realize that we have many new students because we get this oftentimes that a lot of students will say, well, Steve, I'm new to trading, or I don't like the platform I use. It's not my cup of tea. It's too complicated. Half the stuff I pay for, I don't even use, and I stopped using it because it's just too expensive every month for me. So we're going to increase your odds for consistency even more. We are going to throw in the PTS Primo charting platform. That's what I shared with you today. Now, normally, we're going to give you this for a year, for 12 months. Normally, that would cost you over $1,900. Guess what? We're not going to charge you that. In fact, we're going to throw that in for free. So if you're tired with your current platform, if you don't want it at all, or if you're new to trading and you have never used a platform, well, guess what? This is the simplest way I know to apply our techniques because everything is already pre-canned. It's already in there. You don't have to upload anything. You don't have to make sure that the up and green arrows are formatted. You don't have to do anything with the ATTENDEE to format it. It's already automatically pre-canned for you. Included with our PTS Primo charts is the scanner. So we make scanning easy on a nightly basis. Let me show you how simple it is. Once you punch up a chart, let's say you're looking at Apple, all you would do is click on the scan, okay? And as you can see here, strategy number 4, we're looking at Apple. Here's the Apple chart, and right next to it, this window page is our scanner. So you would simply click on Load Symbols. Now, we provide you with this symbol list. This can be anywhere from the top ETFs to the NASDAQ 100, the S&P 500. You can even create your own symbol list. If you like to watch a basket of stocks on a nightly basis, you can create your 10 or 20 stocks that you're interested in. And once you click that on, and once it will give you that list, and you can simply click on the symbols you're interested in, you will see them appear here in the spreadsheet. It takes about 10 seconds, all right? After you see the symbols that you're interested in looking at, then you simply hit scan. It already knows to scan for strategies 4 signals for the next day. You click that on, and on the far right, you'll see a series of bars, either green or red. The green ones simply mean that the corresponding stock has generated a buy signal for the next day. The red ones mean that the corresponding stock has generated a sell signal. So you'll know that night where the next buy setup is, where the next sell setup is for the next day. You can punch up the chart, and then you can verify it with the ATTENDEE. Let me show you, for example, here was a setup in PRGO the other day, all right? Now, basically, it looks like the stock is doing nothing. But if you had gone to the scan, you would have seen that at the end of that day, a buy signal was generated. Now, let's say you're not sure whether you want to take this because it's a $70, $80 stock, but you're thinking, I want to buy options on it, but how do I know this is going to go up? It looks like the stock is doing nothing for the past month. Well, you click on the PET-D, and you see that even though we've been going sideways, the PET-D is translating that the market has been in an uptrend. You see, where most trending tools would tell you, well, there's no trend at all, this is whipsaw, this is a whipsaw environment, the PET-D is saying, no, we are in an overall uptrend. So we're looking for structure to buy. And the structure is in the form of strategy number 4. So you have this dynamic duo in play and giving you the confidence to take the trade. Now, had you taken the trade, well, guess what? The stock jumped 12 points in the next 2 weeks. So you had 12 points to work with. Potentially, you could have captured 12 points. So you get all of this information. Remember, instant course access, detailed instructions, all the entries and exits, the signal alerts, the PET-D trading techniques included for PET-D trading techniques. Now, if you want to keep your own platform, which is admissible if you're comfortable with it, we can provide you with the add-ons that you would simply download onto your computer. But if you need something where you're not familiar with how to use a platform, you don't like the one you're currently using, we're including the PTS Primo charts. Now, this is such a great deal. We're throwing in so much information. It's jam-packed with things that I've accumulated in 40 years. If you bought these separately, it would cost you close to, I'd say, over $5,500, actually $5,600. But what we're doing is dropping this price down for the short term for $29.95. Remember, that includes 1 year of the PTS Primo charts. You have this all at your access here with the platform, with the scanner, with the dynamic duo, all included. So this is a great, great price, tons of information. Everything you saw here on the charts today was generated using the PTS Primo charting platform. That's how simple it is. Remember, a year from today, you would have wished you took this course because it probably will be closer to $5,000 or $6,000 once again, because this is our most popular package to date. Here's how to take advantage of this great discount. Contact my sister site, Pro Trader Strategies. You can email them at trading@protraderstrategies.com or call them directly at area code 310-598-6677 to get this great, great offer. Now, here's the link that will take you up to the sign-up page. But I don't believe that link is live. So if you look at your chat box on the far right-hand corner of the GoToWebinar page, I believe they just clicked on and posted a live link there in the chat box. So all you have to do is click that on. Now, I promised you I'd save the last 10 or 15 minutes for any questions. So I'm going to leave this information up here so that you can contact Pro Trader Strategies, my sister site, and then I'm going to open up our question and answer box. So if you have any questions, or if you are thinking of something, now's the time to write them in. Question, is this good for Forex? Yes, it is. In fact, I'm teaching a Forex college right now where we've gone over strategy 4, and this week we're going to be talking about the PET-D. So yes, it's one of our, I would say it's our most popular package to date. In fact, in my opinion, this works even better with the Forex markets because you've seen as well as I do, if you trade the Forex markets, some of these runs, these trends are tremendous. So the PET-D can get you in a lot sooner, can get you out a lot quicker, and strategy 4 can be applied, remember, to any market, any time frame. One great thing about strategy 4, just separate from the PET-D, is that it can easily be transferred onto any market. So if you like to trade multiple markets, if you don't just trade stocks, you also trade currency pairs, or if you trade, let's say you trade futures, E-mini futures, or let's say you trade the grains, let's say you trade commodities, you can just as easily trade with strategy 4 and the PET-D. So it's not like you have to buy an entire different program just to trade the dynamic duo. It will work in multiple markets in any time frame. Now, I personally like to use it intraday trading because of my schedule. I'm teaching most of the time, and I'm writing my next webinar for the next webinar I'm giving, or the next class. I like to apply for intraday trading. So I use it on tick charts. I also use it on 5-minute bars for the E-mini futures, and it works just as well. Now, remember, there will be small losses from time to time, but that's the beauty of our method. If you have a small loss, most of the time you can make it back rather quickly. So that's the type of method you should be looking for. Not something where you go to a webinar and some guy promises the world and that we never lose. And that's silly. I've been trading for so long. All the great traders that I know still lose. So there's nothing wrong with that. Think of anyone who's a great skier. They still fall down from time to time. There's nothing wrong with that. They're still a great skier. So it's perfectly natural, okay, to have small losses. What you don't want is a method that promises the world and maybe has a couple of great winners and then gives it all back. Unfortunately, this is what a lot of programs out there do these days. And so we teach you how to stay out of trouble by applying these very, very consistent techniques. Yes, if you ask for a recording, you should be getting a link to this, okay? Now remember, a lot of people are saying they love this package, but this is one thing I didn't focus on. But remember, you're also getting me as your mentor. You're getting someone not who's just going to answer questions, someone who's sitting in an office that's paid to answer questions. You're getting someone who has been trading this dynamic duo for 40 years now, who's going to be with you every step of the way. So that's also included in this package. You're getting someone who actually has been applying this to his own personal trading. So I can't think of anything that's more valuable than that. What would you rather learn, a trade or a hobby or some technique and something from someone who's just been using or doing that for a couple of years, or someone who's been doing it for 40 years? So this is something that any question you can come up with, I can answer for you and I can steer you in the right direction, okay? Now remember, we're closing the year out. If you want to finish out the year strongly, and if you, more importantly, want to start 2018 in the right direction, no more where you're having all these hopes and prayers to hopefully have a great year, and then by the first quarter you know that you're never going to get there. This is how we really feel you can turn your trading around. So contact my sister site, Pro Trader Strategies. They handle all of my offers and discounts and courses, and so you can contact them and you'll get this great offer. Remember, if you have a platform that you're happy with, that you feel comfortable, such as TradeStation, Metastock, MT4, NinjaTrader, Thinkorswim, we can apply the add-ons for you. If you feel that you want to use those, that's fine. But if you're not familiar with anything, if you don't feel that you like the current platform you're using, it's just too complicated, you don't use nearly 90% of the things that it offers, and it just is too expensive for you, this is a great offer, 12 months free of our new platform that I designed with Pro Trader Strategies. This was something, if I were learning, this would be the platform I wanted to learn on, okay? So in closing here, I want to say thank you so much. I hope you learned something today and hope you saw a little bit about our sincerity in wanting to teach you and not just trying to sell you the world and say good luck, but we really want you to be a better trader for 2018. Thank you so much for attending, and most importantly, I look forward to all of you becoming students of mine in the Dynamic Duo course. Thanks again. We'll see you next time. Bye-bye.